Today, we will talk about what ex-dividend means and the key dates associated with it. Hi. Let's learn about ex-dividend and its key dates. Ex-dividend refers to the time after which a stock is traded without the right to its next dividend payment. The ex-dividend date, also known as the ex-date, is the day the stock starts trading without the value of its next dividend payment. This means that if you buy the stock on its ex-dividend date or later, you will not be eligible to receive the declared dividend. The dividend payment is made to whoever owned the stock the day before the ex-dividend date. For example, if company XYZ pays a 53 cents per share dividend on June 2, 2023, the payment goes to shareholders who had purchased the stock before the ex-date of May 5, 2023. The record date is May 6, 2023, and only shareholders who had purchased the stock before the ex-date are entitled to the cash payment. On average, a stock often will drop slightly less than the dividend amount. Given that stock prices move on a daily basis, the fluctuation caused by small dividends may be difficult to detect. If a company issues a dividend in stock instead of cash or the cash dividend is 25% or more of the value of the stock, the ex-date rules slightly differ. With a stock or large cash dividend, the ex-date is set on the first business day after the dividend is paid. A record date is set first. Then, the ex-dividend date is set based on the rules of the stock exchange on which the issue is traded. The price of a stock tends to fall by the amount of the dividend on its ex-dividend date, reflecting that its assets will soon be dropping by the amount of the dividend. No, you will not. If you buy a stock on the ex-date, the seller of the stock is entitled to the dividend, not the buyer. An investor who purchases the stock on its ex-dividend date or later will not get the dividend. The ex-dividend date or ex-date is one of 4 steps a company goes through when paying dividends. The declaration date is when a company states that it plans to issue a dividend in the future. The record date is when the company determines the shareholders entitled to a dividend. The ex-date is usually the day before the record date and determines which shareholders are entitled to a payment. The payment date is the day when dividend payments are made. Here are 4 key takeaways. 1. Ex-dividend is when a company's dividend allocations have been specified. 2. The ex-dividend date of a stock is the day on which the stock begins trading without the subsequent dividend value. 3. Investors who purchase stock before the ex-dividend date are entitled to the next dividend payment while those who purchase stock on or after the ex-dividend date are not. 4. The ex-dividend date occurs before the record date because a stock trade is settled T+1, meaning that the record of that transaction isn't settled for 1 business day. Hope this would help. Thanks for watching.